So you want to be an investment banker. Imagine pulling all-nighters with colleagues on bunks inside the firm. And you are going to deal with ethical dilemmas and 98-hour working weeks. Finance students, prepare for this side of iBanking. But before you dive headfirst, you really need to understand what these folks actually do. It's more than just fancy lunches and closing deals. It's about strategy, analysis, and a whole lot of responsibility. Simply put, investment banking helps companies and even governments raise money. They're the link between those who need capital and the investors who have it. Think of them as financial advisors, helping clients make smart decisions about their money. They also manage mergers and acquisitions, or M&A, advising companies on how to buy or sell other businesses. So what does an investment banker actually do all day? Well, it's a mix of things. Financial analysis is key. They're constantly analyzing financial data, like revenue, profit, and debt, to value companies and securities. This data is used for pricing and deals. They build models that help forecast what might happen in the future using Excel and other software. They prepare presentations called pitch books to sell ideas to clients, showcasing their recommendations. And all these things mentioned above involve building relationships with clients. They have to understand clients' needs. That requires good communication skills. All the things that need to be done also need teamwork with their team members. To be a successful investment banker, you'll need a specific set of skills. You need to be impeccable at quantitative things like financial modeling. You need to understand finance and how to apply them. But here's the thing, it's not all just maths. Investment banker need people skills to maintain relationship skills, such as communication, persuasion, and networking. Investment bankers who have all of those skills are more likely to achieve success. Also, it's a high-pressure environment, so you need ethics. It's better to maintain good relationships for the long run. Now let's talk about the elephant in the room's pay. Investment banking analysts can expect a salary between $100,000 to $125,000, plus bonuses. So how many bonuses we talking about? We are talking anywhere between $160,000 to $210,000 in total compensation in your first years. But it comes at a cost, long hours. We are talking about 60-80 hours a week. Investment bankers sacrifice their work-life balance to generate more money. One of the big areas investment bankers work in is mergers and acquisitions, or M&A. Let's say Company A wants to buy Company B. Investment bankers would advise Company A on if they should do that. They help with everything from finding companies to value of company, negotiating terms, doing due diligence, and closing the deal. The M&A process has a few steps involved, which are acquisition or exit strategy development. It involves analyzing industry trends. The bankers contact appropriate buyers and sellers. The valuation has to be made, which involves both parties to proceed with evaluation of prospective targets. The fourth step is deal negotiations. This involves the bank helping the buyer produce the right offer. The step includes identifying risk. The sixth step has the bank negotiate the final closing and deal terms. When investment bankers work for the company that's selling, that's called the sell side. These deals could be IPOs, secondary offerings, divestitures, and private placements. Also, investment bankers support firms in acquisitions of stake. This is called buy side, where they recommend startups. To stay competitive, investment bankers are using many technological advancements to conduct their work. They use CRM software to keep relationships with their clients up to date by tracking their contact. Social media has a vital role by being able to connect to others to form connection and share and inform insights. Investment bankers also have been conducting webinars events where everyone is able to connect. However, they're not all perfect. It is very easy to make mistakes. It is easy to become too reliant on technology. Investment bankers must also maintain focus and strategy. With new emphasis on regulations and ethical behaviors, investment bankers must stay on top of these trends to avoid legal consequences. So what's next for investment banking? Will technology completely transform the role? How will changing regulations affect the industry? And how can investment bankers maintain ethical integrity in a high-pressure environment? Thanks for watching. If you found this video helpful, please like, share, and subscribe to keep watching such amazing videos.